Hey, what's going on, guys? Welcome back again to another video. Today's video we're going to be talking about the difference between macro structure and microstructure. Now, if you look at the screen right now, I see I have macro versus micro. What is the difference and what does each word mean? Today's video we're going to be breaking down these two terms, and that will help you understand the difference between macro and microstructure. So I've searched up the term macro versus micro. So simply put, micro refers to small things, right? And macro refers to big things. It is just the most simplistic way you can put it. Like micro is the smaller structure, which is smaller time frame, and macro is the bigger time frame, the biggest things. How is that in trading, and how does this help us? Here's how it helps us. Let's say macro structure is bullish, but microstructure is bearish, right? So here's what I mean by that. I'm gonna color macro and make it blue, and I'm gonna color micro and make it green. Let's say green is micro and macro is blue. So I'm gonna take this trend line. Here's what macro means. This from here to here, and we're gonna make it blue, make it thicker. Boom. This push, it's a macro push. That's a leg, right? That is a leg. That's a macro push. This is also macro. This is also macro. This is also macro. This is also macro. And this is also macro. Right? Boom. Now look at that. We have macro market structure, the higher time frame. We're on the daily. So this is a higher time frame, a bigger time frame, more reliable time frame to take trades based on. Right? You can see market failed to make a higher high. This high is not broken, and therefore the market has made equal highs here, lower high there, and then it's now trying to break this low, this market structure low. So this is the macro. Now you ask yourself, where's micro then? Micro is when you go down to something like the 1 hour time frame, right? And what will happen is you're gonna see, look at that. On the daily, the macro market structure is just the one push. But when you look at this 1 hour micro, and here's what you see. I'm gonna actually use this. We have a push, up, push, retracement, boom. Micro market structure shifts to bullish. High, high, low, high, high, low, high, high, low. Then boom, shifts again. Boom. And this, oops, hold on. I'm gonna change that to green, and we're gonna make it thicker. Boom. Look at that. Micro market structure makes the overall macro market structure. So on the daily, this whole move was just one big move, right? One impulse move. It's a leg. But when you go down to the micro market structure, which is the 1 hour, and it can go all the way down to the 1 minute. The smaller the time frame is, the more data you are looking at. It's like zooming at something. And then the higher time frame are you looking at at things from an above point of view. Like you can see more clear, not more clear, but you can see the whole picture. But when you're zooming in, you're seeing the pixel, and obviously pixels makes picture. So therefore, look at that. Look how this looks. You can see here we have one push, but inside that push there is micro market structure, bearish, then it shifts into bullish, then it shifts into bearish, then it shifts into bullish, then it shifts into bearish, and micro market structure makes. So how do you use that into trading? Here's what you do. If macro, which is the bigger time frame, is bearish, right? For me personally, I wait for micro market structure to be bullish, which means that that is just a retracement. That means I will be able to get at a better price to sell the market. That which means I will get into a better position and a better risk to reward. The higher the micro structure retraces, the bigger and the more the reward is, the smaller the risk is. So let's say you see the daily, it's going down and you want to take a sell, but you end up taking a sell down here, because when you're looking at the daily, you're not seeing this 1 hour data, you're just seeing the big picture, and then you enter a sell, right? Let me show you. And you enter a sell, let's say after this bearish engulfing. Look where you enter, down here, right? Let's say, for example, you take a short and you trade one time frame or whatever, boom, short, right there. Look at that, 1 to 2, not even 1 to 2, but when you go down to the 1 hour, which is the micro time structure, look at that. You went in drawdown, and then eventually market went your way. So this is what you do. If macro market structure is bearish, wait for micro market structure to be bullish, to retrace, give you a good entry, and your trade could have, instead of being from here, your trade could have been somewhere here with a smaller stop loss here. This trade is now a 1 to 12. Just simply understanding micro and macro structure. Don't take trade based on don't take trade on the macro structure, but you can take a trade based on macro structure, but you can take trade on micro structure once obviously the micro structure is shifting to bearish, and that aligns with the higher time frame macro structure. I hope that is clear, guys. I hope I'm not confusing you. If I am, just drop in the comment, let me know what's confusing you, if there's any points that I'm missing to explain. And that is it, guys. That is for today's video. I hope you enjoyed. I hope you found value. If you did, please smash the like button, subscribe down below for more videos like this and for more free game. And with that being said, guys, obviously all links down below if you are interested, and I'll see you all in the next one. Peace.